So here we go, an extra video for you guys this week, and I finally got around talking about one of my new stocks I have bought. So I bought two new stocks into the portfolio, and this is one of them. I'll do the other one in a couple of days time, but I did buy back into this stock. It's one that I used to own. I actually owned it earlier this year, and I sold it for around about a 25% profit. And the reason why I sold it is the share price just went a little bit too high, and I was looking at a few factors thinking, I can't justify that share price right now, and it's way off where I'd want to buy. So I'm going to take my profit here, and I think it will go lower through the rest of this year, and we have had it go lower, and I decided to buy in. So without any more wasting of time, let's get stuck into this stock. And as always, if you do want to know what I'm buying and selling in real time, make sure you join the Patreon. That's where I post what I'm buying and selling in real time, and you can get my updated thoughts on what I'm thinking with stocks and the stock market in general through the Discord, which you can join for free once you sign up through the Patreon. Only £5 a month, and you get 2 exclusive videos a week. And if you do want some free shares for Trading 212, that's the broker I use. Join through the link in the description. You can get a free share worth up to £100. But let's get stuck onto this stock I have bought into the portfolio, and the stock is Lovesac. I have bought back into Lovesac. So like I said, you will see from this video here, and I posted 11 months ago, I did start buying Lovesac, and after I started buying Lovesac, the stock did start going up, and then I did sell out of the stock, and I've been watching it ever since for the rest of this year. Since then, the stock has been downtrending downwards, and the reason why it's been downtrending, and also the reason why I sold earlier in the year, is I went, hold on, we went from around $16, $17 all the way up to $28, $29, and what I was seeing in the background is interest rates. I was looking at interest rates and I'm going, these interest rates are going up very, very fast. And when you are a furniture company that probably has a lot of your sales through very cheap interest rates, or being able to get money for cheaper rates, you're going to do very well. As soon as these interest rates start going up, not good. This is going to affect the share price and the negativity around this stock, and also it probably will affect the financials. And I looked at the stock and I was like, $29 is way off where I'd buy. I originally wanted to buy around $17, $18, so I decided to sell the position, and now the stock is heading towards $15 again. I was like, I really like it back at these sort of levels. Now, don't get me wrong, we are heading into a higher interest rate environment, so there is potential for Lovesac to enter more towards the 14, even 30, maybe even lower of a share price than where it is right now. But at $15, I think the risk is more factored in there. And in the longer term, not just a couple of bad maybe quarters because of the higher interest rates, I am buying this for the longer term, and I think the product in the longer term will get back to normality, and I think the share price at the moment justifies the risk to reward a lot more with Lovesac. Now, first of all, if you don't know what Lovesac do, most of their revenue comes from what you call the Sactionals. They also have Sacs, which do make up 10% of their revenue, and they do have the stealth tech and accessories that you can do, and you can see these sofas here. Now, basically, if you look at the sofas that are in the background right now, what you're able to do and what is unique about this, and actually I'll go onto their June investor presentation for this, you can see here that they are changeable. So these sofas here, you can actually just, if you want a new sofa, what you do is you don't have to go buy a new sofa. If you want to just change the color, for example, you don't have to go buy a new sofa. What you do is you can change this from this kind of whitey color, I would say. I don't know what color you would actually say that is. More of a creamy color. Anyway, you can change this color. Let's say if you want to go from this color to maybe a black one, all you need to do is actually buy the covers and not change your full settee, which is obviously very unique. Maintainable, so you just take the covers off if you've got kids and they're prone to spilling things on your sofa. Take it off, wash it, or that cover's damaged, well, you just have to go buy a new cover. Movable, so all of these sofas break up into these little parts, so very easy to change around the sofa and change it to the style of the room that you like. Rearrangeable, so if you wanted to kind of put this sofa and this sofa together, you can do. You can change the shape. You can add more seats in by just buying a single one of these sofas. You can add in different parts, different tables, and as well as that, because it's so reusable and you are able to just update your sofa so much, when we look at a generation that's more thoughtful about the environment, also it's very good for the environment as well. The CEO is the founder and has been at Lovesac for 20 years, which is also really good. And if you look at the financial year 2023 key financials, you can see here that 89% of the actual revenue came from these sofas. The other 10% is from some beanbags that they sell. Gross profit, you can see here they throw off about half of their net sales into gross profit, so that's a very good amount of profitability they could work with there. What they do get to the bottom line, which adjusted EBITDA does hit 60 million. Net sales growth of 30%. You can see here the 5-year CAGR has been 31%. So from a long-term point of view, we are going to hit a slower environment here in a higher interest rate, but they are a very fast growth company at the moment. I think the growth rates will slow to more towards maybe 10% revenue growth going forward, which I still think is very good when you look at the valuation that this is at right now. You can see the gross margin is 53%, so I just said I should have looked a little bit to the right when I was talking about this and you would have seen it here. Great balance sheet, we'll look into the balance sheet a little bit later. 195 retail locations in 40 states in the US, so they've got a lot of footprint they can expand to. A lot of the profitability at the moment does go into investing into new locations. You can see here that the customer LTV is around 3,300. And the customer acquisition cost is only 628, and they're also adding in new customers. But this is a great thing about Lovesac, is that we talked about earlier that what people do is, if we go to the second last slide, people, when they buy these sofas, they change the covers. They maybe go buy some more covers. They might add in new seats. They might add in some tables. They might add in some footstools. So people that are buying these sofas are always adding into them or changing the sofas. And what you have here is where more sofa companies are kind of one-time sales. You know, you go buy your sofa and that's it. You don't really buy another sofa, do you, for, you know, quite a few years. With Lovesac, because you can do all these things with your sofa, you go, we're going to paint the room, so let's change the covers on our sofa, or let's, you know, have a bit of a shuffle around in our room. What you end up with Lovesac is actually a sofa company that their customer base is 45% repeat customers. So they are one of the most unique furniture businesses or sofa companies out there where they actually have repeat customers, and their repeat customers are 45%. That's incredible. That is absolutely amazing. This is why I'm buying into this stock, because of this products that they do have at the moment, which is doing absolutely amazing. And right now you would expect the company to be struggling massively in this higher interest rate environment. If you actually look at what Lovesac is doing at the moment, they are doing pretty well. Their EPS was a very good beat in the last quarter. Revenue still grew 9% as well at the moment, which is very good. And the guidance they gave was still pretty strong as well, considering the environment that we've been in. But even though the sales are still doing okay in this environment, you know, imagine what they're going to do when we get out of this high interest rate environment. The thing is the valuation has cut it down as if it's struggling. So you look at the sort of valuation here, and you're picking up this company for 0.5 enterprise value to revenue, total enterprise value to EBITDA around about a 5, which is obviously very cheap. Normalized earnings, you're down at a 7, which is obviously looking pretty cheap. If we actually just go a bit further out, you can see here that's about historically low that it's ever been. You look at the free cash flow, it's around about 6 times free cash flow. It's very cheap when you look on a metric basis, and this is supposed to be in a really tough time for it. You know, you've seen so many high interest rate environment sensitive companies getting affected by it, and without doubt the sales have slowed down in Lovesac because of that, but it's still very, very good numbers in this sort of environment at the moment. And you actually compare that to, say, a rival, for example. So if you actually have a look at a rival, which is Lazy Boy, they are currently a furniture company as well, and you look at their recent numbers, they actually came out with a beat on the EPS, but if you look at the revenue, for example, the revenue is actually declining 20% year on year, which is totally different from the likes of where Lovesac currently is at. And if you look at Lazy Boy's actual numbers, you'll actually see they are trading at more of a premium than what Lovesac is actually trading at the moment, which is absolutely crazy. Now, when you do look at the company at the moment, the growth at the moment from an analyst point of view is they still expect the company to grow very well. Now, I think the first kind of next 12 months could be a little bit debatable. I think if interest rates remain high, I don't know if they can do this growth that analysts are expecting. They are expecting revenue growth still to be around double digit, which I think could be very tough in this environment, but we'll see what happens. But I do think they'll grow back at 10% in the long term as they open up more and more locations. But as you can see here, they are expecting 10% growth going forward from this company. From an earnings point of view, there has been a little bit of a drop off in the profitability as they have been opening new stores, and obviously there has been some sales at a little bit of a lower price. But you can see here they are expecting the profitability to start rebounding going forward, and in the next couple of years they are expecting in 2026, they are actually, or January 2026, they are expecting, analysts are expecting Lovesac to do profitability of around 71 million, which at the moment is a 240 million company. which would mean that Lovesac is trading somewhere around about 3.5 times earnings. So like I said, if they are able to get to them sort of levels, which we did see actually only a year ago-ish, if we are to see the profits start rebounding going forward, then obviously 3.5 times earnings is very cheap. And this is what I mean. I look at the share price right now and I feel like they're doing very well in a negative environment, and if they are to generate the growth and profitability, this will look quite cheap. Looking at the balance sheet as well, pretty good balance sheet. They've got no debt on the balance sheet, which is very good. They sit on 45 million in cash, which is good. They do sit on a inventory of 106 million, so the cash can jump around a little bit because of the inventory levels, depending what they are. Obviously, as a furniture business, you are going to have inventory levels that do chop around a little bit. If we do put cash in equivalents in, you can see that it can jump around a little bit, but if they ever do need a bit of cash, obviously they can just sell off a bit of the inventory. So yeah, they've got obviously a clean balance sheet, which is great. Cash wise, they're pretty well covered, and they should, if they do have a tough time in the next kind of year with a high interest rate environment, they should be okay from a profitability point of view as well. And I guess also another positive is there has been some insider buying inside the company. As you can see here, there has been the director and the chairman of the board picked up some shares around about 12 months ago, and actually in the last month the chairman of the board did pick up some more shares as well, which is obviously really positive to see. And really, since the only really big change that I've seen since I made this video here is that obviously the financials have still done quite well in a higher interest rate environment, but there was a little bit of a change in their accounting. So they did find a little bit of an accounting error in the last mile freight expenses, which obviously I don't think is anything really major, but it's probably worth pointing out that this was found out there. So yeah, I mean, overall, like, the reason why I've started buying back into Lovesac is I do look at Lovesac and I think, compared to where it was, say, at the start of the year, I was a lot more optimistic about the economy and the interest rates. The share price went up, and then I was looking and thinking the interest rates are going a little bit too high. I can't see this doing too well in a higher interest rate environment, and it has slowed down slightly. But now I think the stock is down at $15. I think that definitely reflects that a lot fairer in that share price and that valuation. It also seems to have a bit of security around its actual design. It does have a few patents on the design, and also it was actually suing its rival La-Z-Boy only last year around it tried to copy how it does its actual sofas, and it actually won its case. So it seems like there is a little bit of some moat around the actual product that Lovesac has as well, which is obviously a really good positive to have. So overall, my thoughts are is that it could still be a very tough 12 months for Lovesac, and I would not be surprised to see if I buy here and the share maybe goes down a bit more than where it is right now, and I have left a good room to keep averaging down on this position in case that does happen. But I look at the valuation now and I think that justifies a tough environment, and actually when you look at the financials, they're still doing very well. So I look at the valuation now and I go, if they can get through this kind of tough 12 months and then they start driving up that profitability more towards 40, 50, 60, 70 million in the next 2 or 3 years, as just shows you at the moment, at the market cap it's at, which is around 230 million, I think it shows very much upside if they're able to still deliver the growth and they drive up profitability. And what I see at the moment is if they're doing the numbers they're doing right now in this environment, in this high interest environment where is the biggest time where people aren't going to go out and buy expensive sofas, and they're doing it right now, then without doubt, if the interest rates do pause or start slowing down in the next 2, 3, 4, 5 years, and you got to remember, I'm a long-term investor. I'm not investing for where the stock's going to be in 12 months. I'm going to invest where this company's going to be in 3, 4, 5 years, and maybe even longer than that. I look at that point of view and I think the high interest rate environment will be gone in that sort of time frame, and I think the financials that are doing okay in this high interest environment will definitely improve out of it. And I look at the valuation and I can justify taking that risk on now at $15. So yeah, thought I'd talk about that one and why I'm buying it. Obviously you guys know that this one quite well, and obviously I have left some room that it could go down lower from here, but if they're doing this well in this environment, imagine what they're going to do in a lot better environment. It looks pretty good, and it's one of those that I looked at when I did sell it and I was like, I do wish I didn't sell that stock because I do really like the future of it, but I just couldn't justify the valuation. But now, obviously, I think it is a lot better where I have that valuation at the moment. So yeah, hope you enjoyed the video as always on the weekend, guys. If you could, especially like one if you're new around here, subscribe, and I'll see you in the next video.